Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, August 18th. It's currently 6:11 p.m. Central Time. The outlook tonight, I think, is going to be higher. I think the only focus we have is basically price action. I have to step back a minute. The only focus we really have is weather and the price action. The weather, number one, is drier tonight with the outlook than maybe what we had last week. I think Friday's forecast was not significantly different than what we have tonight, but I think there was an easing of prices on Friday. We had a strong move up in beans, number one, some legitimate reasons to back off a little bit. I think there was some optimistic hope that maybe we'd see a wetter forecast when we came in Sunday night and some improvement in forecast. That did not materialize, in my opinion. I think there's also been a general bearish trader bias and sentiment, especially towards corn and to a secondary effect towards wheat. And I think that prevented people from wanting to take a buy of new position or covering short positions in front of the weekend. But by the time we get to today, Sunday night, the forecast has limited moisture opportunities for much of the Midwest this next week. There's a carrot at the end of the stick in both the 6 to 10 and 11 to 15 day period that maybe we'll see some improving moisture. I think there's a certain amount of skepticism there. I also think that the forecast outlook has a warmer theme, which if we had moisture would be a bearish input, but we don't really have the moisture. And I think you're getting more people to talk about crop conditions being stressed, a larger percentage of the Midwest acres that are being stressed, and several days in front of us here we're going to go backwards in crop conditions. I think you've also got a situation where the Pro Farmer Crop Tour begins this week. There's always some general expectation that the market will stay well supported during that week, and the crop tour will tend to favor being cautious about production potential. Whether that's justified or not, it kind of becomes a self-fulfilling prophecy of the marketplace. If they expect it, frequently enough, it becomes a reality, at least this week, and then we deal with it Friday when we get their final estimate and how the market responds to it from there forward. But I think the weather forecast is supportive. Technical conditions are certainly conducive and vulnerable to short covering energy and building momentum if we start to turn up. I think since we've had the last USDA report last week, I think there's been a little bit of a tendency to get some stabilization at minimum. Short covering conditions are certainly the conditions are certainly ripe for short covering activity in corn, and I think that's where the majority of the bearish sentiment and the overly bearish sentiment would be found. In the case of the beans, even going back to before we had the last USDA report, I think there was a little bit more respect for both sides and uncertain about what the direction would be, and possibly the idea that maybe beans were cheap enough. So I think the market sentiment was much more mixed. We've rallied more than $1 in the last several days with beans. Part of that was due to weather, part of it was due to crop report, part of it was due to short covering activity. I think from here forward, upside potential needs to have weather as part of the component. We need to be threatening a stable or a declining crop condition potential in the bean market, and I think that tonight's forecast does create that. And I also think that the market has already underestimated what type of upside potential existed in beans. Like I said, we've just put on over $1 in the last several days, and we're probably 40-50 cents away from key resistance levels. And if the weather continues to be a concern, a talking point, a threat into the end of August, to add another $1 on the November beans from where they are right now would not be unreasonable, would not be impossible by any stretch of the imagination. And having said that, it also would not be unreasonable to have such a rally occur in the next 30-45 days, have a 30, 40, 50 cent type rally occur in the corn market, and still end up finding that those price levels are unsustainable because fundamental outlook is overall has potential of being more bearish. All of that is reasonable. So I think the producer looks at short-term strength as something that we're hoping for, something that we can create an opportunity to get caught up on sales. you get July corn futures, to above 520, you're talking about hedging opportunities again. So I think there's opportunities for the producer here, and I think he has to look at strength that unfolds over the next 30 days as being a opportunity to make sales, to get caught up in sales, to hedge inventories that he plans to store, things of this nature. But I don't think that, as I've said in the last couple of weeks, it's not time to give up on those opportunities. But even if we get these opportunities now, even if it's weather related, we need to see them as selling opportunities. And I think that from where we're at right now, you're hoping for 30 to 40 cents in corn. I think that's reasonable. I'm not sure what the potential is in beans. I'm not sure what is reasonable. I know that after rallying $1, almost anything you're looking for additional strength here sounds somewhat unreasonable or possibly too optimistic. But I think it is possible that we have at least 50 cents more to go in the beans, and I don't think it's unreasonable to respect the potential for $1. But to have that type of gain, you've got to be able to maintain a weather concern at least through the end of August. Whether that's dryness concerns, whether it's frost concerns, I'm not sure, but most likely we've got to maintain a dryness concern here through the end of the month. Not on every acre in the Midwest, but something where we're maintaining a concern of at least 25% of the Midwest. I think right now we've got concerns on at least a third of the Midwest. So look for a higher market tonight. Look for it to be well supported. I think the weather concerns are going to gain traction. I think short covering energy in corn is going to gain traction. But the soybean market is a place where people accept and embrace weather concerns. They see fundamental merit for more price strength, and I think that's where the focus is on weather. So look for a higher trade tonight. For the DPP Grain Desk, this has been Duane Lowry. Thank you.